So maybe at some point you've wondered, as a yield farmer, what happens when prices shoot up, right? Because normally, if you're in a pair that's linked to a stable coin, you're getting converted to that stable coin and you're missing out on some of the upsides. So a lot of people are wondering, what about in a bull run? What about when things really start taking off? How can I maximize my returns, not just in the yields I earn, but in the actual asset price appreciation without needing to worry about a bull run big? So maybe you just want to have a DeFi portfolio and you don't want to miss it on the upside. Gordon, who I'm sure you've met once or twice on the YouTube channel by now, plus he's got his own YouTube channel and an awesome book on Bitcoin, which I highly recommend you check out, is going to kind of talk us through how we're thinking through that. And we're really going to be talking about asset correlation. So with that said, Gordon, thank you for your time. Take it away.
Yeah, thank you, Lucas. Yeah, and exactly to your point, how do we really position ourselves to take advantage of the true bull run when it does happen? And I'm bringing up the Bitcoin cycles chart here to basically show us where we are in this current, 4-year cycle that we've typically seen in the aftermath of the halving event, when we usually see Bitcoin putting in big all-time highs 12 to 18 months after the halving event. And we're about 150 days post halving, which happened in April of this year. And, I don't have a crystal ball, but I'm kind of expecting, maybe by the end of Q4 and by the time we get into Q1 of next year, we're going to be seeing Bitcoin retesting all-time highs and moving into price discovery. And as you know, altcoins tend to move very quickly when Bitcoin starts to move to the upside, and they'll generally outperform Bitcoin often on a percentage basis. So as a liquidity provider, as you alluded to, when we're in a stable pair, the stable coin in that instance is almost acting like an anchor, preventing us from making, as much of the upside that we could make if we were actually in a correlated pair. And I think, the time isn't quite right just yet, but I'm looking and preparing for later in Q4 and Q1 next year for when I want to be positioning more of my liquidity pools into correlated pairs, so that when those two assets move to the upside, we're going to benefit from all the price appreciation, or at least more than if we were in a stable pair, and ride that appreciation to the upside. So one quick example I wanted to look at was for Solana and wrap BNB. And there's a few different pools for this. There's one on the BNB chain. And again, what we want to assess here is how highly correlated is the pair that we're entering. And we can use the DeFi Llama correlation matrix. I know you've talked about it multiple times on the channel. We use this on a daily basis in the community. And you can assess the correlation coefficient between these two assets by using this tool. And for Solana and BNB, we can see that over a 1-year time period, they are very highly correlated at 0.93. And then we can assess this over multiple different timeframes. So we can zoom in more recently to a 1-month period. It's showing us a 0.8 correlation. And even over 7 days, we've got a 0.87 correlation coefficient.
And just to slow you down for just a second, in case someone's watching this was like, what the heck is going on? If you go on DeFi Llama on the left-hand side at the bottom, you can play with this for yourself. You're going to hit correlation. And then the closer to 1 it is, basically, the perfectly correlated would be at 1, and all the way down to -1. So if you actually add a few more assets, we might see some red. And when those things turn red, they're going to be in minus, which means they are non-correlated. Anyway, there's
inversely correlated.
Inversely correlated. There we go. So you can see XRP, which has sucked compared to BNB. If you were in that pool, they would be inversely correlated, which would not be good for your DeFi portfolio. So we do look at correlated pairs even during a sideways market, because just minimize some of that divergence. Some of that losses that you'll see if two assets go the complete opposite way. So just to give some context there for someone who's just learning this stuff.
No, absolutely. And as a general rule, also, we like to look for correlated pairs that have a correlation coefficient of at least 0.5 or above, so anything of 0.5 and above is the green flag that we're looking for, and assessing that over multiple different timeframes. And, this example we're showing right now is a perfect example of a highly correlated pair. And again, the benefit here of the high correlation is that we've got a much bigger likelihood of staying in range and earning fees for as long as possible, because of the fact that these two assets are so highly correlated. When they move, they're going to move together, and we'll have a higher likelihood of staying in range and continuing to consistently earn those fees. So yeah, that's what I'm thinking
So
about
good.
over the next few months. Positioning my liquidity pools to have a higher percentage of them in more correlated pairs by the time we move toward the end of this year and the start of next year. Because again, I don't have a crystal ball, but I think, we're going to start moving to the upside for Bitcoin, testing those all-time highs and moving into price discovery.
So good. I want to touch on one thing you said, if I can. I think people will be okay. If anyone has any questions on any of this, leave it in the comments. We're always making content to serve you. So if you have any questions, do leave it in the comments. I had the pleasure of hanging out with some, 50 million, 100 million, 250 million net worth type individuals in Miami. And I love when I'm in rooms like that because I ask questions, especially how they think. And one common theme I saw to a lot of these guys is, like you said, here's what I'm doing now, but I'm getting ready, and they have a plan for when markets shift. And it's just like they're playing chess with the markets in their respective fields. Some of these guys are developers, some of them are alternative assets. One guy runs a hedge fund, but they're like, in 2 years, here's our plan. In 5 years, here's the options. Like they already have all their plays laid out for like the next decade. So whatever the market does, they're not caught being like, what do we do now? And I found that fascinating because I know personally I can do a better job of that. I'll have a short-term goals, but it's like, what happens after that? And what if things don't go the way you want it to? What's your plan there? And these guys, I think the reason they're so successful financially is at some point along their journey, they kind of mastered that, and they were playing financial chess while most people are playing, I mean, checkers at best. Most people not even close to checkers. So that really inspired me. Maybe I'll do a video on that to just share some of the back end conversations because I'm like, this is the stuff that I was never taught. And one of these guys, as an 8-year old, he was in rooms of billionaires because his family had huge net worth, generational wealth. So as an 8-year old, he's hearing billionaires have conversation. And the stuff he told me, I'm like, could you please write a book on this? Because people don't have access to that. But he's like, that book wouldn't sell because most people wouldn't be buying the book on like the stuff that actually sells isn't the stuff that people need. Most of the financial advice, Dave Ramsey stuff, I think is super, super flawed. So fascinating stuff. And I think what you just mentioned, what you're doing is I'm preparing for when the market does this is a sign of, at least from my perspective, like financial and investment chess, not checkers. So that's pretty cool that you
Yeah.
said that.
Absolutely. And I think, we're trying to build out strategies for all seasons, in
Yes.
the UIG and in the fast
Yes.
track with clients. We have delta neutral strategies, we have hedging strategies that David's been talking about. So
Yep.
yeah, if people want to learn
So
more,
good.
they can check it out.
Check it out. Or if you got any questions about any of this, we are really committed to creating. I really want to create a financial education channel that has alternative investments, but it's just like we're creating an army of financially educated, financial savvy investors who are trading money for money so they don't have to trade it for time so they can actually have time to ask the deeper questions. And I think that's the only way, literally, over controlled governments and just, I think, a messed up world changes because now, hey, we can breathe, we have some time, let's fix some real problems, not just how do we pay rent this month. And to me, that really motivates me. So if anyone has any questions, let me know. If this video was helpful to you, like the video, subscribe to the channel, let Gordon know below how the video was, ask any questions, and I'm sure we'll create some content for you. With that said, Gordon, thanks for your time.
Thank you, Lucas.